Dear friends, next I will reveal to you the ultimate rules for this chapter, which are to avoid risks. On the road to business evolution, it is important to become bigger and stronger, but sustainable management is the key. Several traps are very dangerous in business. We often encounter them, and once we fall into them, it is difficult to extricate ourselves. So let us see these traps one by one. The first one is leverage. Leverage tools are so destructive that they can easily swallow up all wealth. Many investors or entrepreneurs have encountered this dilemma. Leverage is different from simply investing with your funds. Investments' returns are relatively slow, but if they are not working, they will not in turn engulf the already existing wealth. The problem is often human greed. They want to make money quickly, so they choose to use leverage. In this way, earning once is equivalent to earning multiple times. They form the habit of relying on leverage after 2 or 3 successes. When this habit is formed, as long as there is one failure, all the previous accumulations will disappear, and they may even be saddled with huge debts. Considering the factors of industry selection and the economic cycle, we should face the reality that it is difficult for investment wizards like Buffett to appear again in today's business society. Of course, we are not advocating the complete absence of leverage in the entire process of company operations. Leverage can be used appropriately within extremely reasonable boundaries and an extremely controllable range. However, we cannot rely on this, let alone regard the use of leverage as a habit. If someone uses leverage frequently, it is only a matter of time before they go bankrupt. While leverage can bring huge returns, it can also accelerate losses. Once a loss occurs, there is no chance to react. The second trap to guard against is using short-term debt or funds for long-term investments. We have seen a listed company before that was very large at one time but later went bankrupt and was taken over by Gree Group. A typical mistake made by this company in its operations is to use short-term debt for long-term investment. It raises funds through short-term methods such as equity financing and debt financing and then invests in long-term infrastructure projects such as environmental protection and waste recycling. The returns of these projects are usually long. Once short-term funds are insufficient to cover liabilities, the company will face tremendous pressure. Similarly, part of the funds in the company account cannot be used for long-term projects, even though the opportunities look good. However, the funds in these accounts are not all freely disposable cash. Long-term investing needs to be made using real profits. Even if the investment suffers a loss, it will not have an impact on the company's daily operations. The third trap is to attack at multiple points at the same time. As we pursue company expansion, we may face the temptation to pursue multiple projects simultaneously. However, this trap can result in resources being spread thin and failing to achieve significant results on any one project. We need to stay focused for a certain period and have enough accumulation to deal with a later boom. Good strategy requires looking at the overall situation from a macro perspective but not trying everything at the same time. If one project in one of these areas fails, it could hurt other ongoing projects. When we talk about quickly occupying the market, the best way is, after successfully creating a template, simply copy and paste the success model to increase the number of income-generating units in the same pattern, instead of working on different projects with different methods at the same time. The fourth trap is a guarantee. A guarantee means that when a company needs a loan, it asks other parties to provide a guarantee for its loan. This is a common business practice. However, as a guarantor, we need to be careful about who we are guaranteeing, who the guaranteed person is guaranteeing, and how many companies it is guaranteeing. You cannot accurately understand the risks that may arise from the guarantee chain you are involved in. Once one of the companies goes bankrupt, it may trigger a chain reaction. A guarantee is worse than simply lending money to a company that needs money, so the risks are more intuitive. If a company is not qualified to borrow debt directly but needs to borrow it through the guarantee of another company, it is itself abnormal. Therefore, the existence of such means in the financial system is itself irrational. The fifth trap is entering unfamiliar territory heavily. If the new industry we plan to try is very different from the one the company is currently in, it is very dangerous to immediately invest a lot of resources in this field. Maintaining operations in our areas of expertise is a more prudent approach. For example, a well-known Chinese company that performed well in the original online TV field suddenly invested tens of billions of dollars into the completely unfamiliar automotive field, which ended in failure and bankruptcy. When entering an unfamiliar field, We should take small steps to test, move forward gradually, and seek help and advice from professionals. It will barely lose big money in an area we are familiar with unless there are large changes in the external market environment or other unpredictable emergencies. However, in unfamiliar territory, it is easy to suffer significant losses due to a lack of professional knowledge accumulations and precipitations. My friends, running a business is a game full of challenges. In addition to strengthening the company's internal management and predicting external market changes on time, it is also necessary to guard against the above risks. They can have a huge impact on businesses. Achieving rapid development is not about taking desperate risks. On the contrary, we should use more scientific and reasonable market methods to pursue the rapidest expansion based on the safest technologies. We will share more advanced technologies with you in the future. At the same time, we also hope that we can abide by the 12 golden rules. Each of these rules is a key point for entrepreneurs and team leaders to run their businesses smoothly. They are part of the business wisdom accumulated by thousands of companies' experiences. The future business war will be a war for professional players. Only by mastering these methodologies and knowledge can we continue to open up greater strategic space for the company and defend our camps. We sincerely hope to make progress together with everyone in front of the screen, keep up with the pace of the times, receive full success in our future careers, and keep winning in the future. So let's move on to the next chapter together.